Good morning, ladies and gentlemen. My name is Greg Michaelowski, and this is a Forex commentary for FXStreet for Wednesday, November 3rd, 2010. The market is obviously waiting for the FOMC rate decision this afternoon at 2:15. The expectations are that the Fed is going to engage in quantitative easing to the tune of around 500 billion. There's estimates above, there are estimates below. Most people think that if the Fed is going to do it, they got to do it in a fairly large way. Otherwise, what's the point of doing it? As a result, that number is a nice round number that the market seems to be happy with. What the effects of it are still unknown, but the attempt is to spur on some sort of inflation. The Fed is worried about deflationary forces. Now, on key days like today, where we have key events, what I'd like to do is take a look at a broader look at some of at the key levels in key technical levels from in some of our currency pairs. That way, we know if the bias is bullish or the bias is bearish for the currency pair. What we do know is that the market is probably expecting what the Fed is going to do. Whether the Fed or not does that or not, we don't know. What we also don't know is what is priced into the market as well. So the only way to gauge that is through technical analysis. And so this is why I look at the key technical levels. And off the daily chart, what we have here is this bull flag here, and the market held the bottom. We broke out to the top side of that bull flag yesterday. We have not moved sharply to the upside just yet, but we have held the bottom side of that trend line at the 139.88 level here today. The low came in at 139.91, so that's positive for the euro versus US dollar. Taking a look at the hourly chart, that move to the downside here also broke through the 140.04 level, which is a key level for this currency pair. And I'm going to go back in time, kind of scroll back in time, and I'm going to point out these levels at the 140.04 level. This is the level we came up to use it as a high. We came up, used it as a high. We broke through the level and moved sharply higher. Then came down and used it as support. When we came down and found some support here, and then broke away from it. When we came back up, we used it as resistance. When we came up, we used it as resistance. When we broke above it, we used it as support. Then fell through the level. When we came up, we broke through the level, used it as support, and on the way to downside. You get the idea of what the 140.04 level has done over the last few days. The market used it as support here. We use it as support until breaking to the downside. Now that level is going to be a key level, obviously, for today's trade. And the other level that I'm going to be watching is this trend line off of this triangle, this same triangle here, right here. That level is going to come in around the 139.74 level later on this afternoon. It's probably going to be around 139.73, 38.2% retracement of the move. Move up from the lows all the way going all the way back to this period right here. This low to the high is also a level that we're going to be watching. That is basically the range for October, the narrow range trading range that we've been in. That comes in at 139.59, and the 100-hour moving average comes in at 139.45. These are all the key levels on the downside. The market's going to be following on the top side. Get through the highs for today at the 57 level and yesterday, and then move up to the high from last week. That level came in at the 140.79 level, and then we have this topside trend line coming at 141.10 or so around the 2:15 time this afternoon. So that's going to be our key levels to watch in the euro versus US dollar. Something like the pound sterling, we had a nice sharp move to the upside here today. And we had this flag formation. We broke to the upside, but failed here in the flag, and that resulted in this move back to the downside. Back to test the 38.2% retracement. Look for support against the 100-bar moving average and the 50% retracement line in that currency pair. As you can see, we have this support at the 160.83 level as well. That corresponds with these highs going back to November 1st of just a few days ago for the currency pair. On the downside, the other key level is the 160.09 level. Let's call it the 160 level. That's going to be the 100-hour moving average. This is a level you're going to be watching here in this afternoon's trading for the sterling versus US dollar. On the downside, if we break through that level, look for rotation back to the downside in that currency pair. The dollar yen is the final currency pair that's of concern here, and you can see that we are breaking to the the upside. In fact, we just broke above another key level at the 81.12 level. That 81.12 level corresponds with, I'm going to go back in time again with this floor here. We had a nice floor. We broke through it rather quickly and moved back to the upside here, and then could use that level as a floor once again. That 81.12 level also represents the 50% retracement of this move from the last high on October 27th down to the low on October 29th. Broke through that level. Now the next level of resistance is 81.31, then the 81.50 level on the dollar versus yen. On the downside, the 84 to 88 level is a key level for the dollar versus yen. That level corresponded with prior lows. If you go back to October 14th, this low was 88, this low was 87, this low was 84. Each time the market went down to that level, we bounced rather dramatically to the upside, and now that level, we just broke through that level here today, and that has helped spur the market up. You can see how the market held support at the 90 level to move to the last highs here in the dollar versus yen. So that's a positive. That's the key level, 80.84 to 88 in the dollar versus yen. That's a level to watch here this afternoon. So on the top side for the dollar versus yen, we do have some room in the upside for this currency pair, but the one level that I do want to bring out is this 82.87 level. What's the significance of that? On September 15th, the market held, the Bank of Japan came in and intervened in the market. That caused a spike to the upside for that currency pair. You can also see that this trend line off the high comes in around that level here today. So 82.87 is going to be a key level for the dollar versus yen. Keep that level in mind. This is Greg Michalowski with a Forex commentary for FX Street.